Hey CEO, welcome back to the CEO CFO, where I help women business owners like you master their money and scale their businesses without the financial stress. So, real talk. If you're making six figures or more and still struggling to pay yourself consistently, this video is for you. Most business owners do this backwards. They make money, pay expenses, and then hope there's something left over for them. But today I'm sharing a game-changing system, and it's based off the book Profit First by Mike Michalowicz that flips that upside down. So you get paid first while still running a financially healthy business. Today we're covering why most entrepreneurs stay stuck in the paycheck to paycheck cycle, the Profit First system explained, and how to structure your business finances to always be profitable. So stick with me, because by the end of this, you'll have a system to put yourself first and build wealth into your business. Let's dive in. Let me know if this sounds familiar to you. You have a great sales month, right? You're feeling on top of the world. Then those expenses hit. There's rent for your office, payroll, software, marketing. Suddenly that big month doesn't feel big anymore. You take home whatever's left over, if anything, and you're stuck in that cycle. This is called the bank balance accounting, and it's why so many entrepreneurs struggle, even if you're making six figures or more. But there's a shift. Instead of making the money, paying the expenses, and hoping there's a profit, we're flipping that script. We're going to pay yourself first, then run your business with what is left over. Enter Profit First. This method has helped hundreds of thousands of business owners take control of your finances, and now it's your turn. Now, a quick caveat, I am not Profit First certified or trained on it, but I've read the book and I love the methodology behind it. And this is what I want to help my clients with as well. So the typical accounting formula is revenue minus expenses equals profit, right? That's what you see on your profit and loss statement, and it's pretty standard. But there's another way you can run your business, and that is the Profit First formula, which is revenue minus profit for you getting paid as the business owner, and then that equals expenses. And this is what I would call the CEO money move formula to use. So instead of hoping for a profit, we take it first and then run our business on what's left over. So a quick example, I have a client that we've talked about her goals for the year for her business, right? And so we set up her salary to pay herself what she needs to get paid to have, for kids, for her mortgage, for her travel and fun and all of that. So we have already set up that salary, so she gets that every month. Now she knows she needs to hit her numbers in her business, right, to make that. But we also make sure she gets paid, and then we talk about the other expenses afterwards. All right, so I would definitely suggest checking out the book Profit First by Mike Michalowicz to get all the details. But this is going to be a quick overview of how I am trying to help my clients get more organized and pay themselves first. So step one is setting up the bank accounts. And a few of the bank accounts that are the most commonly used in this system is the income account, profit account, owner's pay account, a taxes account, and the operating expenses account. Now, to break those down in some detail here, the income account is where the money comes into. So this would be where your LLC business is set up. If you have contractor payments or direct deposit from a company that you're working with. Also, it'd be, for example, if you're a real estate investor, it would be where Airbnb is depositing those payments, right? So you're getting that payment first. It's coming into that account. Now, when you get that payment, you're going to look at, then start allocating into the other accounts that I mentioned. One of the other accounts is the profit account. It's a percentage of the revenue goes straight into profit. The owner's pay account. This is your paycheck, not what's left over. Now, typically, we want this to be your personal bank account, right? So that if you're set up as an S Corp, you have payroll and direct deposit, hopefully, so it's simple and less to do. And that's getting sent right over to your personal account. So you can live your life, pay your expenses as needed. Then there's the taxes account, because let's be real, the IRS wants their cut as well. And tag a quick shameless plug, I guess. I work with my clients to try to get you a good strategy so you're paying the least amount that you're due to pay, right? But something to note is that the tax code is written for business owners and real estate investors. There's so many tax breaks. So with a great strategy, you're going to pay less tax, but we want to plan for it. I hate to see business owners think they have that money to spend and they're not paying their quarterly taxes. And then at year end, it's a big worry and financial surprise because you haven't been saving that. So we do want to have that account. And then we want to have the operating expenses account. And that's what's left over to pay your business expenses, advertising, rent for an office space, office supplies, postage, shipping, payroll, those kind of things. So now you're able to see like, okay, this is what's left over. And now I can make a budget, start cash flow forecasting from my income and expenses left over from that. All right, so step 2 is to allocate by a percentage. And again, the book does a great job in this detail, but I'm going to give you kind of some examples so you can think about that. So you're going to allocate your revenue by a percentage every time money comes in. You split it up. Now, I've started doing this and it has been a game changer for my business. Just that feeling of, hey, I can start seeing profit for the business, savings being set aside. I'm putting money into the tax account as needed. And I'm really dialing in on what expenses I should be planning for instead of having it all really put into being kept into the same bank account. Then I can go, oh yeah, I do want to buy that thing, or maybe I do need the new computer and it's sooner than I need. You start spending a little, I would say, carelessly if you've got too much money. It's that saying, it's burning a hole in your pocket, right? So we're going to go through, and so for this example, is for a business owner under 250,000 in revenue. So some examples for that would be, so some profit percentages on a business owner making under 250,000 would be 5% profit, owner's pay 50%, taxes 15%, and operating expenses 30%. Now, again, this is just an example. Yours are going to be different, but it's giving you an idea of what to plan for. Now, for a business making 250,000 to 500, we're looking at bumping those up a bit. We're going to say profit 10%, owners pay 35%, because you're actually making more in the business, but you're going to start reinvesting into the business too. That's how a business actually grows and scales. Hiring more people, having more advertising costs so that your business can grow, right? So that owners pay at 35%, taxes still about 15%, and operating expenses bumped up to 40%. That ensures that you are always getting paid with that profit account getting set aside, your pay, you're setting aside taxes, super important, and your business is running efficiently. All right, so let's make this actionable. Here's how to start Profit First today. Open up those separate accounts. Now you've already got the main account, hopefully, that's separate from your personal. You're set up as an LLC, so that should be completely separate to begin with. That's for another video later on, the importance of keeping everything separate, business and personal. But open up those accounts. So you've got your business account. You're probably only looking at needing to set up one for your profit and for the business, for the taxes separately. You've got your own personal account where you're wanting to send your pay, And then that last one that you're spending for the expenses, because you're wanting to keep that extra or separate, right? So you can set those up. Set up there's like Relay Bank Financial. It's an online account that is built on this formula as well, which is pretty cool. I've recently started using Stessa for my own rentals properties, and they have a bank account, which has a great interest rate if you're a pro member. And so that's something to check out as well. Not sponsored by any of these, but I just do a lot of checking into and using them myself, right? When there's things I'm recommending. So that's step one. Step two is setting up the automatic transfers. Now, this one's could be a little bit trickier, like for me, for example, and I think a lot of my clients, which are a lot of professional services, consulting, realtors, and the real estate investors. And even me, you're not getting a consistent monthly amount, right? I bring in a lot more at tax time because I have all my annual tax clients coming in. So I'm doing this more as it's coming in. I look at my deposits for the day and I start allocating those percentages manually. So see what works for you on this side. You could do it daily, you could do it weekly, depending on the income stream. But I would say this has been huge for me, as setting aside that profit account for the business has really been great, so that I'm really having to think about what I need to spend on. So works for me just as well. Working for my clients, great as well too. The goal is to stop living paycheck to paycheck within your business and for you personally, right? So step three on this is adjust your expenses to fit your profit plan. This is where the real magic starts to happen. You start running your business on what's left over. How great would it feel that when you get paid, you're actually paying yourself first, right? That's the whole theory, is you're going to get yourself paid over. You're going to transfer that from your business account to your personal account, either a transfer or through payroll if you're an S corp, and then you're going to see what's left over. And this is going to cause you to really look at your business and see what you're spending money on and what you need to cut back on and make adjustments. Or I have to say, the fun part is, where do you need to make more income? And that's another video as well. So keep watching in the series, because it's not all about cutting back. It's making more income to meet your business and personal goals, right? And getting you to be more efficient. So wrapping up, as I was mentioning, instead of spending whatever you have, you'll start asking, do I really need this? Is this giving me an ROI? This forces you to be leaner, more profitable business. And remember, start where you are. Even if you only allocate 1% to profit first, now this is profit for your business, that's okay. The goal is to build profit habits that grow over time. So, all right, CEO, let's recap. The biggest reason business owners stay broke, even if you're making six figures or more, is because they pay their expenses first, not understanding what's going out the door, and they pay themselves last. We're going to not do that anymore. So profit first flips that. You get paid first, and then the business runs on what's left over. So go back to the recap of the 3 steps, super simple, but we'll list them here too. Open up those separate bank accounts, set your allocations, and start automating. More so, probably I'd suggest manually. That's what I'm seeing it works for me. But see what works for you if you can set up that system to start paying yourself first. And if you found this video helpful, please like it, subscribe, give me a comment, leave me a note of if this is working for you, and share with someone, another CEO that needs to stop living paycheck to paycheck in their business. And then tune in for the next video in our CEO series that will help you get started on your next step here.